whoever buys this property, I think if they can get it for it would be a fantastic investment. However, hey guys, today we're going to be looking at a property that is sold through the lens of a property investor, and we're going to see if that property would be a good property investment. Today we have a property, Cornwall Road in Rochester. Now we're looking at this property as potentially a flip. That was my original kind of going into this property. That's what I had in my head. Okay, let's try and flip this. But then going through some of the photos, I noticed that it didn't even need all that much doing. Maybe some new floors. Look, we'll look through the photos here. Look, we're looking maybe some new floors. It doesn't need plastering, I don't think. It just needs to get modernized. New stairs, maybe new wallpaper. It probably doesn't need plastering, but yeah, even the garden. I mean, the garden just needs a quick, a day's work will clean that up. On the outside, a spray down. Yeah, so it's a very light refurb. So in my head, I was thinking, okay, there's probably not that much potential in this property. But let's just go down the numbers and find out anyway. So what's the first thing you do when you found an opportunity? The next thing is you need to find out what it's actually worth. And to do that, you need to see local properties that are in the area that are in a similar condition, but more importantly, some that are in an end condition. So you know that if you do it to a good standard, what's the price of the property going to be at the end? I've done that for you right here. And I don't have any current market comparables. The property is generally quite an average condition. So there was a bunch of comparables. It was kind of hard to decipher which one's going to be end and average. But I did the best I could, and I managed to get all of these pretty much within a quarter mile of the property. They're all very, very similar to it, and it gives us a good amount of data to average up the price per square foot. So when you're doing your own personal comparables on an opportunity you found, there's 3 important things you need to know. You need to know what it's sold for. So first of all, you need to make sure the properties are within the area and are like for like, right? Same kind of condition, or ideally, even if you can't find any in the same condition, you need to find some that are in really good condition so you know what the end value is. But you find out the end condition properties, and then you find out what they sold for, when they sold, and how big the property is in square meterage or square footage, okay? That way, you can find the price per square foot, and then with the date that it's sold, you're able to work out the appreciation or depreciation in that area. So you can like work it out a little bit better when it comes to it. Okay, so the formula for that is price divided by square footage, and then you multiply the appreciation. And you can find the appreciation on the area. There's lots of softwares that give you that, and there's lots of websites as well. You just have to do a little bit of Googling and you'll be able to figure out. But there you go. In this particular area, what I found over the last 2 years is the price of the area has gone down quite a lot. It's actually gone down almost 20% over the last 2 years. And now I can't tell you the reason for that, but last year, the market was in free fall, and the year before that, it wasn't all that good. So we have to take it for what it currently is worth, and everything's kind of been going down, right? So if we adjust all those and then we average all those pound per square foot up, now we just need to times that by the square footage of our property, and now we can get an idea of what our property can end up as an end value and current market. Now I don't have any current market comparables, so we are just going to go on the end value, but that's the more important one anyway. And what we get is 490, which is fantastic. That means we've got a lot of room to put some work into this and get it to that 490 standard, right? Which is exciting. So now let's go back to the property and look for where the potential is in this property. So if we have a look at the floor area, it labels itself as a 2-bed house. So what do we have here? We have 2 bedrooms, and then this is bedroom 3/lounge. So potentially 3 bedrooms in this and a reception room. So easily 3 bedrooms. Upstairs, into the loft, it just labels itself as a loft room, and it has a big area for storage. So I'm curious as to what that could be. And another area for storage as well, which looks like there's a door into that. So that to me shouts that that's either another bedroom, or if it's, not in the condition to be a bedroom yet, that can easily become one with planning permission. So that's quite exciting. It might not even need planning permission. It might even just come under permitted development rights. So that requires a little bit more looking into, but that's really exciting, okay? So we've got potentially 3 bedrooms, maybe 4, and then we've got a kitchen downstairs and a garden room. Right, okay, so I'm seeing a lot of potential. So potentially as an HMO, I'm thinking you get that upstairs converted into an HMO, you're now getting 4 bedrooms. I mean, from the space upstairs, I mean, it's similar to the space downstairs. So that could be even 2 more bedrooms. So there's big potential there. But let's say we're not going to do anything with converting rooms too much. We're just going to do a refurb and then see how much that's going to cost. See if we could just refurb it and then flip it. What kind of returns we're looking at. So going back to the photos, as we said before, it doesn't even need all that much work. So I've gone ahead and I've done quite a light refurb, and I've said, okay, all new flooring, all the rooms repainted, rewire kitchen, bathroom, new boiler. I've also put in for all new windows and doors. That might not even be necessary at all. Okay, and then the garden, I didn't put a price for a garden. If you're going to buy this and invest, you could probably sort that out within a day. But that gives us a cost after an extra 20% for contingency in case I miss anything. There might be damp in the property that needs to be assessed and sorted out. But without going to the property from just a surface look, I think 45,000 or almost 46,000 is a pretty reasonable build cost for this house. So now we have the end figure. We know what we're going to be able to pay or around the purchase price, and now we have the build figures. We also have some other fees. So we'll have to pay stamp duty on this property, which is 17,500, legals 2,000. If you bought it from an agent or a sourcer, 7,500. Then that brings your total investment to 447, but almost basically 450,000. Okay, so we now know our total investment, and we know that we're probably going to be able to sell it for about 490, which gives us a flip profit of £43,000. But considering how much money we put into the deal, that is only a 9.6% return. So would I say it's the best flip on earth? I don't think so if you were just doing a refurb. But I think there's so much opportunity if you were to convert the loft, maybe get a little bit of an extension. I think that currently the market is down 20%, but the market in this particular area is also going up. I mean, everywhere in the UK is going up a little bit, right? Last year was a bit of a struggle, and now house prices are slowly but surely going up. So I think if you were to buy now and then give it a year or two, I think the market will probably recover, and then it'll be a fantastic investment because you'll be able to sell this for an extra 20%. So do I think it's a great investment now? I can't be 100% sure because in a year or two, it might be a fantastic investment in terms of if you wanted to just flip the project. Also take into account that this is a really light refurb. This will probably only take 2, maybe 3 months, maybe 4. And the average sale, the length of sale in that area is an average of 33 days. So it takes a house 33 days or just over 33 days to sell. So if you are able to do the whole property up within 3 months and then put it on the market and sell within 2 months, so start to finish 6-month project, even though you're getting only a 9% return, that's still 43,000. And if you find another project that does the same thing in the next 6 months, then you've made £80,000 that year, and that's a 20% return on investment. So that might be what the if an investor has bought this, that's what the target is, to just do lots of quick flips. So that's a fantastic strategy if that was the goal. However, what if the investor wants to rent this property out? What kind of return can they get for a rent? Well, as a buy-to-let, you're looking at getting about 1,500 a month for this property. which gives you a return on investment if you leave all your money in the deal at about 3.05%, which isn't fantastic. If you rent it out as an HMO, the average HMO rates in the area for per room that is sharing a bathroom is about £616. So let's say you rented out 3 of the rooms as an HMO, then you'd be getting about 1,800 or almost 1,850. So that would give you £12,000 a year. Now you notice you're getting paid more, but you're actually making less than a buy-to-let, and that's because you have to pay things like a license, and you've got higher and because it's an HMO, you're most likely going to have to pay for other things, such as the gas and electric, the water, the insurance. You're going to have to pay for the convenience of someone being able to just move in and live, right? So you've got a higher cost if you wanted to rent it out as an HMO. So you're actually making less money if it was running as an HMO. So maybe that's not the best strategy either. Then you have it as running as a service accommodation. Rochester is a beautiful area. It's very, very nice. It's very cultural, historic. There's lots of things to see there. It's a nice little town. If you were to rent it out, I've done some reports on the area. You could rent it out for about £135 a night. The area occupancy is 60%, which means after all the bills and fees, you're probably left with about £15,000 a year in profit and a return on investment of 3.36, which is definitely the best return on investment out of these. However, considering they're all very low, if you had the property and you had to, all right, I want to make some money for it, I want to go traveling, I want to go live my life. If you had the property, then I think service accommodation, definitely start with that. Give that one a go. It does require a little bit more of an upfront fee because you have to purchase more furniture to get it into a nice condition to run it as that kind of business. But that's where the money's at. But if you don't want to go through the stress of it, then just rent it out as a simple buy-to-let to a family, or maybe even a social housing company. If you could get in touch with them, they like to rent it for you over a period of 5 to 10 years. So I think that's probably the best strategy if you were to rent this out. But looking at this, what does the number have to be to make this a great investment, in my opinion? So if I was looking at this property and I was going to buy it and I wanted to make a lot of money, 375 just isn't cutting it. But we don't have to go a whole lot less to get it within the realm of what I would be happy to call a great deal. So we're at 375. I think if we can get it to at least, or at most, 340, then that would be fantastic. That is almost 20% return on investment. That's a profit of 81,000. And so I think if whoever buys this property, I think if they can get it for 340, it would be a fantastic investment. However, I think this could be a fantastic investment if someone was just buy and hold. If the person who bought this property is planning to live in it, then they could get a really small mortgage. There's 5% mortgages out there right now. So they're able to buy that for, say, a 5% residential mortgage, spend 2 years living in the property, doing it up. And that way, if they're doing it up themselves, they cut all the cost of the build cost, maybe in half. That way they don't have to get other builders to take things on. So they're reducing their build cost. They're living in the property, so they're making the most of it. And then after 2 years, then the property is going to be worth way more. They can get a buy-to-let mortgage on it, either rent it out or just flip and sell the property on. So I think this property has the potential to be a great investment, depending on how much they're able to get that price down. But as it stands, I think this is a pretty average investment, and I wouldn't put this as part of a deal unless I could get that price down to 340. I hope you've enjoyed that video. You've kind of been given an idea of what a very average investment would look like. It's not awful, it's not terrible, but there's definitely better deals out there, and they are the deals that I look for. I look for deals that give you a 20% return on investment if you wanted to flip it, or if you wanted to do any extra work in terms of development or converting a property. These are the kind of deals that I look for, and they are the kind of return on investments that I look for my investors. So if you're thinking about investing in property and you want to get your hands on some of these deals, I personally work on a bespoke only basis where we work together. I find out exactly what you're looking for, and then I will go out with my team of deal sourcers and we will find your perfect opportunity for you. If you're interested in that, then sign up to my website and book a bespoke call with me. I'd love to get to know you and your situation, and I hope you like these videos. If you want, make sure you subscribe, and I look forward to seeing you in the next one.